Welcome back to Bit by Bit. Today's episode was recorded a few weeks ago. It's with Obi, the CEO of Coinfloor. It's taken me a few weeks to get this one out because I had some technical difficulties. We had connection issues and I had to move all my equipment into another room closer to the Wi-Fi halfway through the interview. So thank you, Obi, for bearing with me. And also, thank you very much for sponsoring the show. We had a long conversation before the show and afterwards, kept in contact, and I was really, really impressed with what Coinfloor have to offer. Obi has offered to sponsor the podcast, and I'm very happy about that because I have somewhere I feel comfortable sending friends, family, and listeners. So for anyone who is looking for an exchange to onboard, have a listen to this show, and I think you'll find out that Coinfloor are doing things properly. Firstly, thanks for coming on. Like I said to you when we had the conversation the other day, I had you on my list to come on anyway after listening to Stefan Livera's pod with you. And I've just been today looking through your website and looking at everything you've got on Coinfloor. And it's looking really good. It's what I've been saying for a long time we need in the space. We need people who are more Bitcoin focused. We need less shitcoinery. I saw a little bit down there where you had education on there as well. So that's nice to see.
No BS education.
No BS education.
No BS education. No, and also, by the way, very importantly, when we did it, it's important to just have fun. So there's a lot of little humor. There's a lot of in-jokes in there. I don't even care if people get the in-jokes. As long as we get the in-jokes, that's what matters.
That's it.
You've got to have fun. This is a fun industry. We're changing the world. But anyway.
It is. I think it's the most exciting and most fun industry, well, certainly that I've ever been involved in. You definitely don't have the snob factor. You don't have to really watch what you say as long as you're being a decent person.
So I think, there are debates and arguments, let's be honest in this, but it is definitely a much more pure industry. It's less sort of sugar coated and so on. Mm-hmm. There's a raw element. And I can just tell from looking at you and me that, I've been around the block a little bit longer than you. You're like much more fresh faced. Yeah. And I can tell you that going back throughout my entire career, there's just nothing like this industry is. And so I doubt there'll be another industry that has this combination of so many different people, so many different viewpoints, all coming together around this shared concept. I can't imagine that happening again for a long time.
It's crazy. So what brought you in? We all sort of have, I don't know about one aha moment, but maybe a few. What was it that brought you into this industry and what were you doing before?
So high level, I think there were multiple aha moments. So beforehand, I was a geek. So I was CTO of a number of successful UK .com companies. So I graduated in late 1990s and I went straight into .com one for an online auction company, pure e-commerce. That's definitely .com one. It went on to be one of the largest e-commerce companies in Europe. After that, I was involved in .com 2. That's the social web. And I was involved with a company making massively multiplayer role-playing games. So a bit like World of Warcraft or Club Penguin or a Habbo Hotel. We had a company with 30 million users. That's where I actually got exposed to the idea of digital money. It was in a walled garden, but just like Linden Dollars in Second Life, we had our own. WeWorld was a company where they had We Points. And these people, mainly 16-year-old American girls, was the biggest demographic for our site. But they would be spending hours trying to earn points by doing different activities just so they can get a Justin Bieber t-shirt or it may be. And some people spend 40, 50, 60 hours a week to earn these virtual points, which they could only use within this world. And at that point, it became clear that the concept of money was a shared belief because this is a very, very limited money. And then in 2011, another techie friend of mine pointed me to this article about Bitcoin. I spent a number of months looking at it then. I played around with it a little bit. And then I decided to drop it when I saw the price plummet from almost $100 right down to like the single digits. And I forgot about it. And I was actually working on my own tech startup at the time. So I continued to, and you're pretty busy when you're working on a startup.
Yeah.
So I focused on my startup. But that was my first beginning of an aha moment, because I did think the technology was really interesting. But I just thought, this is probably not going to work, especially with the way it dropped. It's just too volatile, etc. 2 years later, when my previous business was basically winding down, my soon-to-be co-founder came to me with the idea of doing something in Bitcoin again. And I looked at it, and in that time, it had gone from, I don't know, $10 to, it was now in the hundreds of dollars. And I thought, okay, there's something happening here. Let's do something. Let's create an exchange. But unlike many of the exchanges at the time, we would be transparent. We would be reliable using our experience from the past. And we would make sure we try to be secure because using our experience from the past. And so we got involved. And over the next 6 years, the rest is history. But what happened was we became aware of the economic aspects of Bitcoin, which is arguably more important or as important as the technical aspects. I mean, effectively, the technical aspects give an excuse to believe in the economic aspects, or their foundation for the economic aspects of Bitcoin. And that's this sort of censorship-resistant, ultimately zero inflation money. And that was the ultimate aha moment when I realized it was actually about this sort of economic revolution and the technology underpinnings just to help to enable that. That's when I realized, okay, this is something that we have to really just make a mission to happen.
Once you understand that bit, then it also makes you understand that a lot of the shit coins that are sort of searching to find a solution for a problem that doesn't necessarily exist, when actually Bitcoin is solving one of the biggest problems on the planet, probably the biggest problem on the planet. So it doesn't need to search for that. Once that clicks, it's like, well...
I mean, again, that clicks. I have to thank our board for that in that case. So when we very early on, you go through rounds of funding, and we're going through putting together our second deck, because we'd already got funding for a second deck early on. And even then, early, this was back in 2014 or so, you had all of these different use cases potential. They weren't actually materialized, but people were talking about bill of lading, identity on the blockchain, and smart contracts. This was pre-Ethereum though, but just the potential of these ideas. And obviously remittance, and then finally as a store of value use case. We had all these listed because Bitcoin is going to change the world and it has all these use cases, because it's still only about Bitcoin then. And then I was actually my chairman I have to thank. He said, look, this all sounds interesting. I hear about this, because he was coming in every a month or so to just review what we're doing. But could you just help me understand what's the different market size of all of these different use cases? And they're all massive. Yeah, but can you just put a number on each one? And okay, we'll go up and do that. Fine. I think it's a bit of a waste of time, but let's do it. It was not a waste of time. We checked. Most of them were, this is like a $500 million use case. This is a $2 billion use case. This is a $3 billion use case. This is a $10 billion use case. Then you come to store of value. That's a $1 trillion use case.
Yeah.
And then once you just saw that, it's like, why are we wasting our time with anything other than the $1 trillion use case? It's like a waste of time.
Yeah, because it sounds big, if you say, oh, it's a $5 billion industry or it's something, but then when you actually look at store of value and you go, okay, right, in comparison, this is just, yeah.
I mean, maybe in 50 years' time when the market's fully mature, but 0.1% of this market will still be bigger than the entire market of something else. What about you? When did you get that aha moment?
I just fell down the rabbit hole really hard. So it's been about 2.5 years, something like that I've been sniffing around. And a friend of mine came to me and he said, look, so I was working as an artist at the time.
Okay.
I still do, but this has kind of just taken all my time since I got that aha moment. So he calls me up and he just says, look, you need to understand Bitcoin. I know you well enough that you will love this. Like, this is so, because I'm always the one who is, I'm quite sort of, I wouldn't say full out anarchy, but I'm not really somebody who believes in our political systems and that kind of stuff too much. And I have a few issues with the way things are set up. And I was, alongside my art, I was working in the property business, and I was saying, it was great when I first got in, but we're getting more and more regulation. It's getting more and more of a pain in the arse, and the juice is not worth the squeeze for me anymore in property. So anyway, I sat with him and he explained to me about tracking wine on the blockchain and Ethereum and all this stuff. And I was like, well, it sounds cool, mate. Like, I don't understand it, but it sounds cool. Can I give you some money and you just invest it for me? And he went, no, I'm not going to do that. You need to learn because I know you will understand this. And I was like, all right. So I chucked a bit of money in. And
he
then
did you a massive favor by that, by the way.
He absolutely did. And I thank him.
Carry on.
Yeah, no, I completely agree. And I thank him all the time for it because most people wouldn't have done that. Anyway, so I watched all the YouTube videos, a load of idiots talking about EOS and all this sort of stuff. And it took about 6 months before I got onto like Bitcoin Twitter. Yeah, sorted through like, okay, this guy has made 10 calls. They've all been wrong. He seems like a bit of a dick that I wouldn't trust in real life. And I finally got to like a little group where I had people that I trusted and that were making sense, and they were all Bitcoin only. So then I went, okay, right, let's just focus on this one thing that all the smartest people I'm speaking to all believe is the only thing that's important. And I dug a little bit deeper, and then, so it took about probably 7 months, I think it was, until I was just like, right, everything else is just bullshit. And I went just Bitcoin.
Yeah. And it's not, I mean, I think you got a lot of smart people in Bitcoin, especially in the sort of development. But it's also much easier to make sense when what you're talking about is sensible.
Yes.
What happens is if there are some logical flaws in what you're trying to put forward, that's when you actually, the more you try to dig into it, you more you come up with contradictions. And you don't, and that's the case for basically everything other than Bitcoin. So anyway, that was the interesting story. So that's how you got into it. I think people who tell you, no, I'm not going to do this for you. I'm going to try, because the main learning here is monetary. Well, there's many main learnings, but one of them is monetary re-education. We've gone for our entire life learning the wrong way to deal with money and a wrong way of thinking about money. And then a lot of it has to be sort of unlearning that and rewinding and starting at the beginning. If you don't do that, you'll still, no matter how much you're exposed to this gift horse, you're going to keep looking it in the mouth, and it will just be a parallel universe, invisible to you.
Yeah, just can't see it, which is amazing. And a lot of really smart people, just a few of my friends who very, very bright. It's taken them a year of me absolutely just every time I see them, I bang on to them and I'm like, look, you're one of my best mates. I know you don't want to listen to this, but I'm telling you because you need to. It's taken them about a year, and now it's clicked and they've gone, oh, right, I get it. But it's always like, so some of these guys, they'll go, oh yeah, well you didn't tell me that it's got a cap. You didn't tell me there's only 21 million. I didn't know it was digital scarcity. And I'm,
I told you only, like Thomas Edison is like, I didn't tell you like 1,000 times. I told you only 999. You're right. My bad.
Yeah. But it just took that much time to click because it's so weird, isn't it? I mean, like digital scarcity is weird. If you say to someone digital scarcity.
There are some weird bits. But overall, if you look at the existing financial system, there are far more weird bits. Like some group of random dudes and dudettes decide on an interest rate, and then the economies of the world sort of wait with bated breath to hear this announcement, and then all of a sudden there's a flow of activity. I mean, that seems insane to me.
It is. It's crazy. When you really think about it, it's mental. That is something with Bitcoin that, like, once you understand it, I think it makes you feel comfortable and secure, and you know where you stand. With fiat money, like you're saying, you don't know where you stand, and a few people make a decision that affects everyone, and you've got no say in it, and you don't know what's coming. So how can you prepare? How can you plan in business? You don't know what's happening with interest rates, and you don't know what's going to happen with the economy. Then how do you make a plan? And you're constantly just playing catch up all the time.
I do think that I think that's true, but I was just the other day, I was looking at how I feel in terms of my level of comfort with Bitcoin today than compared to how I felt 5-6 years ago. And 5-6 years ago, I was basically shit scared. It was much more scary. There were many unknowns. There were multiple attack vectors or ways in which Bitcoin could be destroyed, or the perception of that it could be destroyed. Yeah. And there was some sort of theoretical debate saying this shouldn't be an issue, but you never know, or you never knew. But then what happened is, over the following 4 or 5 years, the vast majority of those risk scenarios actually happened. So, for example, back in 2014, people would say, or even 2013, people would be saying, if China, all the mining is in China. If China banned Bitcoin, Bitcoin's dead. China's banned it a couple of times over this. And Bitcoin's still fine. Or if miners tried to collude to take over Bitcoin, it's dead. Well, that happened, and Bitcoin survived and got stronger. And another example was, if Bitcoin forked, that's it. It's game over. And as you've got Bitcoin Cash, Bitcoin SD, Bitcoin Gold, Bitcoin Diamond, Bitcoin Super, it survived. And each time it survived, it didn't just survive, it got stronger, because a risk that many people put forward as a concern actually materialized, and it was fine. So I'm actually now have the view, what are the remaining concern areas? I'm just looking forward to this actually happening, and for us realizing that Bitcoin gets through it, because that's the only thing that stops it from that slight niggling concern, not in my mind, in some people's minds, from reaching its ultimate. It's interesting, and that's why the level of passion and belief is so much higher now, because of all those things that have happened.
What do you see now, if anything, that concerns you in Bitcoin?
Because if you're dealing with other cryptocurrencies, there are a multitude of concerns. But for Bitcoin itself, if you think, I think it's, first of all, why objectively do we list Bitcoin? Because to be clear, my view is that Bitcoin is amazing and it has a lot of potential, but it's only just good enough to offer to, especially to pure retail as a cryptocurrency and as a new form of money. And that's after being a decade old and having a huge amount of development, and a lot of the bigger risks that appeared in the past, like the risk of a fork and what that would do, or risk of China banning it, or whatever it may be, have materialized. And we know that it's been able to handle those and get stronger. It's basically been, as Nassim Taleb would say, anti-fragile. And by looking at it, you can think there's 4 properties that you want to see from any cryptocurrency worth its salt. One is that it should be value-based. And what I mean by that is that it seems like an obvious thing, but the cryptocurrency should actually try to be being a money. If it's saying that its value doesn't matter, then why the hell am I investing in it if the owners say that you shouldn't worry about its value? And you'll be surprised, there's a number of cryptocurrencies that have said that. Most notably, Ethereum for a long time was saying the value of Ethereum shouldn't really matter. In which case, you shouldn't be on any exchange. Exactly. And that only changed, there became this movement that Ethereum is money movement, when they realized that wasn't a good idea. The next thing is it should be technically mature. So have a certain amount of technical maturity. And that's sort of obvious to explain. The third should be that there's a strong community around it. There's a lot of people who believe in it, who are developing it, who are owning it, hodling it, and so on and so forth. And finally, there should be, because it has to operate in a world where regulations there should be regulatory clarity. The regulators in general have said, this one, for whatever reason, it is what it is, and we're comfortable with it. Now, when you take those 4 criteria, the kind of long story short, only Bitcoin fits those 4 criteria. Most regulators around the world basically say there's other stuff that might be securities, but Bitcoin is what it is. Some of them have the same view around Ethereum, and some have the same view around a few others like Litecoin, but generally that's quite a strong one. In terms of value-based, there are a lot of current cryptocurrencies that believe they're value-based, but the real sticking point is technical maturity. If you take what's perceived as the second most popular cryptocurrency, which is a distant second, which is Ethereum, the actual core developers of Ethereum publicly came out the middle of last year saying that Ethereum 1 isn't good enough, and we're going to create a completely new cryptocurrency called Ethereum 2, completely new blockchain, every aspect of difference. And the only thing it has in kind is that it's got Ethereum in the name. And that's literally it. And when the actual the founder of Ethereum and their core developers say that Ethereum is not good enough, I cannot objectively disagree with them. They're just telling me that it's not technically mature enough. And at that point, we knew we had to delist. And we don't think there's any argument for anyone in there reasonably to list it after that point. And maybe in 5 years when Ethereum 2's out and it manages to succeed in performing the technical equivalent of landing on the moon while cooking a souffle and levitating, if it manages to do all of that, and I think, I don't think it's going to manage to do all of that.
Yeah.
But if it does, we'll consider listing. If only just as a congratulations for managing to achieve the impossible. But what are the things that then remain for Bitcoin? I mean, one concern is that it could be banned by governments, like a major Western government. I think that's probably the biggest risk for Bitcoin, and that risk is relatively small right now because almost every major Western government is regulating or has regulated it. But if it continues to be more and more powerful in 10 years' time, it could be that they might change their mind. There's always if someone decides to put in a law, they can change the law. Again, I said that there is a risk, but I think what would be interesting to see happen is that people attempt that. One major Western jurisdiction attempts it, and then the large holders of the cryptocurrency who are in that jurisdiction respond either by leaving the country or by lobbying the government or whatever it may be. And we need to see that happen, because then if it turns out to be a cautionary tale and people see that if you try to do this, it doesn't end up well for you as a governing body, we now know that test has been passed. The other remaining tests is there could be some sort of severe technical bug in Bitcoin, because it is software. There have been actually minor bugs that have been corrected, but we haven't really had a very severe one that hasn't been corrected early on. Again, I feel that the risk of that is very, very low at this stage. But if it does happen, we've seen this is where the other altcoins, and some of them might be considered shitcoins, actually serve a very useful purpose. They allow us to sort of see what would happen if types of questions can be answered. So we've seen Ethereum, which is the second largest, have a number of major issues, and it hasn't really affected Ethereum. If Bitcoin has one major issue in its long track record of not having any significant major issues that haven't been resolved quickly, then I think it's reasonable to assume, based on seeing what's happened and played out for Ethereum, that it will just be corrected and people will just move on. Yeah. And if I list probably the third and last major one in my mind would be that a large number of miners or some state actor or conglomerate of miners form together and try to perform a 51% attack. More likely state actor, just from an economic incentive point of view. Again, I feel the risk of that is very low. And also, this has been a concern from day one, or at least from day one from my time in the space. And there's been so much game theoretic discussion around how to handle it that if it did happen, there'll be multiple contingency plans put in place and they'll be dealt with very, very quickly. But that being the case, until these things actually happen and we see that Bitcoin just blasts through them and moves on, it's always going to be a niggling argument in some contrarian's mind.
Yeah, I definitely agree with what you're saying. In terms of the mining, it's something that I've discussed with people a lot, actually, is that it would have to, in my mind anyway, it would have to be nation state. Yeah. Because the incentive structure is set up in such a way that if you've invested all of that money into your equipment and all that time and you believe in Bitcoin, which you would have to do to set that up, then why would you attack the one thing that earns you money? It just doesn't make sense. So it would have to be nation state. And if it is nation state, the amount of money they would have to throw at this, I mean, they could just print it anyway, so it doesn't really, I suppose, matter.
It's not their money, so that's why it has to be nation state. It has to be somewhere you're not using your own money.
yeah, exactly. But I kind of think that, I think it's almost, in my mind, at that stage now where, no, it's not mainstream, but I'm pretty sure that there's enough savvy, wealthy, powerful people who keep quiet about what they hold and they have a lot of influence. And I think for that reason, it's less likely as well, because it's not in their interest to see this thing go away. Certainly now, maybe in the future, if it really takes hold, they might get a little bit scared. But I'm sure we've got people with some power in power who hold and keep quiet.
put to me a number of times. I have to admit I have a slight problem with that argument because it's sort of an argument of there will be powerful people who will protect us type argument, and that doesn't
protect themselves
to be fit with the we have to be your own bank, self-sovereign, and so on. If I have to rely on these other powerful people to protect us, and that's why I prefer the approach, which is if 95% of people on the planet decide to take Bitcoin one way, it doesn't matter because Bitcoin to me is the one that I share with the 5%. And if I have that mindset, then it literally anybody can go off and do whatever they wanted. I still have my Bitcoin, and obviously you want enough people to still have the same mindset as you to accept your currency. But as long as you have a critical mass of people who want to accept your version of it that hasn't been subsumed by some state actor, then that's all you need. You don't need everybody in the world accepting it. And, the arguments that Bitcoin's not money because I can't just go into a shop and buy whatever I want. By that argument, then, if I'm from a small island and they have their own currency, that's not money because I can't go with that money to America and buy something. And therefore, if I can't buy it in America, therefore it's not money. It's ridiculous on its face type argument. So
it's one of the first ones people come up with. It's that, and you can't buy a coffee with it, and all these sort of things. Yeah. And it's
you can't
crazy.
Buy a coffee round where you live, but you can buy a coffee somewhere else, and that's the point.
Yeah, it's interesting. What's your thoughts on privacy? Do you see that as an issue, or are you sort of fairly comfortable with the way things are going? Or maybe you can't say because
because I run an exchange and we have to. This is a really interesting one, and so we run an exchange and we're fiat to crypto exchange, and therefore part of our side is fiat, and as such we have to do KYC AML. So if you're using exchange, you won't have privacy from the exchange, and the exchange is regulated now in the West. It's regulated, so therefore there will be some right for the governments to, if necessary, request information from the exchange, and that is just the way it is. That being the case, I also understand that if we look at the properties of Bitcoin, you want to make it over time. You want to make it the best form of money that exists, and what makes something a good source of money? I was actually having this discussion earlier today. Ultimately, money is just a shared illusion, it's not illusion, but a shared belief. And there are two types of people in the world. There are people who will trust based on an emotional sense of what the community believes is the money, when it comes to money, that is. And there's people who will want to understand from first principles. They'll try to come up with a theory of why do I logically think this is the correct money. Actually, this is one of the scenarios where the people who want to come up with the logical reason, like myself, are, in my opinion, wrong. It's actually the people who just trust are actually understood the fundamentals of money, which is if most people that are important to me or I interact with believe it's money, then it's money. Even if it's actually a very bad money from a technical point of view, a bad money from a technical point of view that everybody believes is a better money than a good money from a technical point of view that no one believes in the short term. So the belief part of it is very important. However, the people who want the technical argument are a significant part of the community, let's say 40, 50%. So 40, 50% look at it from first principles and have come up in their own logical way to determine that it's money. Then the other side who don't really care, they just want to know what the majority believes is money, will agree with them. So when you look at that and the properties that you want from money, one of the ones that Bitcoin is not as strong as we would like it to be is fungibility, i.e. one Bitcoin is the same as another Bitcoin. And privacy and fungibility are highly related concepts because you can't have privacy of your coin if it's not fungible. But I feel that that's the thing that I like to focus on, the need for fungibility, which means that, and if you look at the developments that are happening in the Bitcoin space, a massive percentage is related to fungibility and making that better and better and better. At some point, that's going to come to a head where, you're going to get to a level of fungibility where it starts to affect the ability for different organizations to perform their regulatory functions. That might be in 50 years. I'm hoping it's slightly longer than the point where we exit on our cryptocurrency exchange. But that is a desire in the community to make. But the desire is not necessarily about privacy directly. A lot of it's just technically, I want to make the best money possible, and the best money possible will be a private money. It's just a product of it making the best. So I do think at some point in the future that's going to come to a head where state actors and purists who are focused on making the best money, which is a very, very good aim to focus on, will come into conflict around that concept. But that's my view. It's a complex, nuanced view. What's yours? Yeah. It's just privacy 100%.
I would very much like it to be private, but I understand why it's not currently. And obviously having that verifiable supply is more important. I believe it's more important than having perfectly private money right now. We have to be able to verify supply. Otherwise, that's one of the major things. You don't have that. Well, it's still useful, but it's nowhere near as good as it is currently. So in an ideal world, I'd like to maybe see these privacy solutions be on second layers, or, things like Samurai Whirlpool or Join Market, and these kind of things are quite interesting to me, but they are too complex for most people at the moment. Like I couldn't just say to a friend, here we are, here's Bitcoin, buy this, and you want to use it privately and you don't want to be tracked. Okay, well, you've got to download this, you've got to build this on a Raspberry Pi, it's just too much for them. So once it gets to a stage where it can just be simple wallet and it just does it all in the background, then great. I just think it's a while away. I think it's going to be a few years personally.
Yeah. It'd just be interesting to see, especially for the store of value use case, fixed supply. First of all, you said a really interesting thing. The jury's out on, can you maintain the level of confidence we have in the fact that there is no unintended inflation of the currency, and the supply issuance policy, the supply issuance rules are being kept to religiously, which is key to fixed supply, which is something that only Bitcoin does in the entire existence of all assets. There's no other asset which is also some sort of commoditized type money, could be used as a money, which is a mathematically fixed supply. So is there a way of keeping that and also having perfect privacy? Is it even possible? And the jury is definitely out on that. But then your second point, which is valid, I think it comes to the question of, if we believe that store of value is the most powerful use case, at what point would you spend your Bitcoin on a cup of coffee?
I would personally never. When I say never, I mean maybe when I'm in a wheelchair or got a walking stick, that sort of age, then maybe I will. But certainly for now, because I see so much upside, why wouldn't I spend fiat, which I know is devaluing, and it's pretty good. The real shitcoin.
To get all this crypto stuff. I think there's a fundamental thing where people look about the technical aspects of making Bitcoins better for spending, etc. But what we don't understand is, I'm sure people do understand, that's wrong to say, but what people sometimes overlook is that, just like my revelation that the economic aspects of Bitcoin are far more important than the technical. The economic aspects of what makes a really good medium of exchange are far more important than the technical. So if I have two monies and one is inflationary and the other one is disinflationary, and eventually it will be fixed supply, which one am I going to spend first? Well, I'm going to spend the one that's going down in value first. So the fact that fiat currency is almost by design inflationary will mean that it will always be a better medium of exchange than Bitcoin, because I'm going to have to spend all my fiat before I'm going to be crazy enough to spend my Bitcoin. And the only time I will start spending my Bitcoin is when I've run out of fiat. But fiat is printed out of thin air, so you can never run out of fiat. So you literally only spend your Bitcoin when you have no option. And so that's only going to happen. Why would you ever have no option? Either because you've spent all of your fiat and you have this large lump sum requirement to spend, and you have to dip into your Bitcoin. So you will do it then. Or because you have no other option, you have no fiat. Or the merchant insists on taking money only in Bitcoin. But then they have to be providing a product that is so compelling that you need so much that you're willing to sell your Bitcoin to get it. And so that tends to be things that are like potentially addictive, for example, which no one else will sell. You have no choice. And then you will spend your Bitcoin to buy it. If you're buying it with Bitcoin in any other circumstance, then you haven't yet fully understood the real value proposition of Bitcoin yet. Because once you do, then you wouldn't be doing it. And so that scenario where Bitcoin is being spent is the end game scenario. That's like your Avengers endgame, Bitcoin endgame. And that's when everybody understands that it is a truly powerful store of value, better than anything else. And then all of a sudden, it's probably going to happen very quickly. People will just say, sorry, I'm not accepting anything other than Bitcoin. But it has to be a number of people, because if you find 50 people and 20 will say they only accept Bitcoin and 30 won't, you're going to use the 30 who won't. So you have to have this sort of wholesale realization, no one touching anything other than Bitcoin. And at that point also, if that ever happens, you come back to the concerns around governments starting to ban Bitcoin at that stage. Because they'll be uncomfortable with no one willing to accept their currency.
Is that how you sort of see things playing out? Do you believe in this sort of gradually then suddenly idea of that things are just we're not going to see a lot of adoption, and then it will suddenly
use cases, for like normal buying cups of coffee. I mean, if it's something that you cannot buy any other way, you can do that right now. But if it's something that you can buy another way, then I don't really see the sense of buying something and immediately buying Bitcoin, because one, you then have a tax implication. You'd have to do a tax return on that. Why don't you just buy it with fiat as opposed to buy Bitcoin and so on? It's not really helping, in my mind, the economy, because it's sort of like a false help. It's an unnecessary transaction. Real help is where you're performing a transaction that really is made useful because of Bitcoin, because of demand. So I see for mass market adoption, there's going to need to be a lot of work done on building up the technical infrastructure. Great work is happening on Liquid, on Lightning, on state chains, so much stuff. So that needs to happen. That's several years worth of work. And then in the interim, more and more people need to see that Bitcoin doesn't die, because, people ask this question, which comes first? Medium of exchange, store of value, medium of exchange, store of value. And it's like the clue's in the name, guys. Store of value tells you which one of the two is more valuable,
Yes.
Giving away value is more valuable than holding on to value. I really don't understand why it's a really big argument. So the store of value concept around Bitcoin will become more and more understood by more and more people. And at some point, people will realize that property compared to Bitcoin, no. Equities compared to Bitcoin, no. Fiat compared to Bitcoin, no. Then everything else is not really a question about, fine wines or wine or fine art, etc. That's not even a discussion. And at that point, when that realization becomes wholesale, you're going to start seeing people saying, they may not say, I insist on Bitcoin, but they'll say, if you buy with Bitcoin, the price is 5% less, 10% less.
Yeah.
They'll just push it as far as they can go, because they would want it, and they'd want it to get it in the easiest way possible. And that's how they would do it. At that point, people start seeing that, more switch through, of course, but you're going to have this sort of flood of transition, and then you will only use fiat for paying your taxes, at that stage, because I think taxes will almost all, other than small jurisdictions, I think taxes will always be in fiat, because the government will insist on that. But for everything else, you'll be forced to spend your Bitcoin. At that point, by the way, the price will stabilize as well, because if the flows in and out are starting to equalize, you won't see, at that point, the people who are currently detracting on Twitter or so on about investing in Bitcoin and so on, that's when they come in, when there's no more upside,
when it's no longer volatile.
They will stop preventing their friends from coming in as well, when they've basically force them to not take part in this revolution and get any of the benefit.
Yeah, a lot of people with that volatility argument, it's like, well, I don't see the problem with volatility to the upside. I don't see where their argument is there. I mean, I guess it's if you're looking at it over a month or 2 months, or, if you're looking at over 5 years or 4 years or even 3 years, it's always the direction you want it to go. So,
yeah, I mean, there is, at the end of the day, it's an investment thesis. It's speculation. It could be wrong. It could go to zero. You buy a house, it could go to zero. Anything where you're making a call that you feel that this is going to hold its value or not lose too much value or increase in value, you're speculating. So someone just the other day was suggesting to me, they're giving all these problems with Bitcoin and why it shouldn't be used as a hedge. And I said, even £10, even as little as £10. No, you shouldn't put any. And it's not in people's interest to do that. And I go, well, at what point would you be willing to suggest to use Bitcoin? And they were saying, well, when it's a fact, when it's an absolute fact is when I would be doing it. I go, so what basically you're saying is when it's actually absolutely no risk and it's in the past would be when you invest, which would mean what you're saying is people should, by extension, shouldn't ever invest in anything. And they should never invest in a house. They should only buy liabilities. Never buy anything that they want, by your argument. And you think that that's better advice to give to someone to just always never speculate to any, even to £10. I think that's pretty bad advice.
Yeah, that's interesting advice for sure.
Well, it's not interesting by definition.
Yeah,
no interest in that advice.
We're coming up to the halvening. We have got a pretty crazy world out there, and the backdrop is mad. Are you seeing an uptick with people with interest? Are you seeing a lot of change with your exchange? What's happening? Because obviously you're seeing things from a very different perspective to what most listeners and I would see. Do you have any insight there of what you're seeing?
Yeah, I mean, I think we have a lot of insight, but I think the insight that we're having is relatively aligned with the insight that you're seeing now. Yeah. And that's when I know that we're heading into a new bull run. Mm-hmm. When you're in a more of a bearish market, behind the scenes, there are a lot of people sort of shuffling for position. There's still a lot of capital entering the market. There's still a lot of very, very interesting development happening. But the mass market sees it as Bitcoin's dead. So the view of the mass market and the view of the people who are inside are somewhere between diametrically opposed or at least divergent. When you know you're heading back into a bull run is when your view and the general market's view are highly aligned. And right now and that's what I look for, the level of alignment. And then when it's got to the view where I'm like, we're the most conservative people in the room, that's when you know that you're about to head into the next bear run and it's about to fail. So that's when that's when last time we had the Long Island Iced Tea Company renamed to the Long Island Blockchain Company. That was where it went too far. And it was like, okay, we're so the hodlers, and I would suggest even, it doesn't really matter how long you've been in the space, it's a mindset. So I definitely think mindset-wise, you're in the hodler category. Yeah. But there's, by definition, it's about being consistent, not getting too excited when it goes up, but also not losing belief when it goes down. It's about consistency. And so right now what we're seeing is the general market is aligning, and they're coming into line with the view of the hodler mindset, which is to buy and buy regularly if you can, etc. And at some point in the future, I'm guessing each iteration will take longer and longer. The first halving is almost like the firing gun for the beginning of the race. But just like the beginning of the race, you build up speed, and it's not until you're way down after you've started that you're at full speed. So you probably won't see that much happening right now. And a few people even trip up and then get up and carry on running, chariots of fire like. But the first halving, I think from the point of the halving to the peak of market was like about a year. This is the second time from the halving to the peak of market was 18 months. And I don't know whether it's 18 months, 24 months, 36 months, but it does make sense that each time round, it requires far more capital to come into the space for it to reach its peak price. Mm-hmm. And as a result, and that just takes time. It just physically takes time to move that much money for people to, this time round, people are eyeing $1 trillion market cap numbers or more. And that's just a lot of money to sort of enter the space. Obviously, you don't need all of that to enter the space for it to go up to $1 trillion in market cap, notional market cap. But still, you need a significant amount more money than was needed at the last bull run for us to reach the projected and anticipated highs.
Lucky we've got a lot sloshing around then, isn't it? lucky we got enough printers burrowing away.
Yeah, and we're seeing that, and it's not just Bitcoin. Even with all of the sort of devastation in terms of companies over coronavirus and the pandemic, you're seeing these record growth levels in the stock market. I mean, it's insane. There's a prediction at the property market. Again, with remote working and people's need for living close to work and so on fundamentally changing, there's still predictions of these massive growths in real estate price. Why? Because there's going to be a lot of people who are going to have a lot of capital and they need somewhere to put it. This time round, though, those choices that are people invested in, even though they were bad choices, they didn't really make sense, they now have a choice that does make sense in the form of Bitcoin. So this is going to be an interesting 24 months. It's going to be super interesting.
Yeah, and I noticed you had on your website, so you're doing weekly buys and dollar cost averaging. Now that is something that, so for me personally, like I'm known in my circles as like the annoying Bitcoin guy, but when people get interested, they will contact me. And the advice I'll always give is buy a little bit every week. I hate that much as you're willing to lose, because I actually see this as like, I'm very, very confident on it. But I always say just buy a little bit every week and just learn. Listen to a couple of podcasts, dig in. I send them a few articles, but don't just pile your money in, because if you do that and then it dips 30%, then you're going to get scared, you're going to jump out, and then it's all going to be over for you. So I really like that dollar cost averaging. Have you seen a lot of people taking to it, or what's the?
So in a word, absolutely. Yeah. But it's the same thought processes that we went through. It's like we think there's a lot of BS in the space. There's a lot of amazing companies, just to get me, but there is a lot of BS in the space, and that's one of the reasons why we decided to enter the retail exchange market. And the thought process is this, we've gone through a journey. We've looked at other cryptocurrencies. We've made mistakes, as have a lot of people in the space. And what we wished was that at the time, we're that Bitcoin guy, Mr. Bitcoin in the community or in your group of friends. And most of the time people are ignoring you, sort of pretending they're not around when you're talking about Bitcoin. But at some point, the market turns. And people then say, you know what, I want to learn about Bitcoin. And there's two types of people, again, in this respect. There's some people who would just sort of see an advert and just give it a go blindly. But there's a large number of people who say, well, let me just do a little bit of research first. And who am I going to go? Well, I'll start with people around me who I trust as friends, who have my best interests at heart, and who have been going on about this for a long time. Now, hopefully, they meet someone who's a Bitcoiner and it hasn't sort of on this sort of evolutionary rut, ended up in an evolutionary rut and got confused, and they say, no, it's all about DOT or whatever it may be. Yeah. And they're a Bitcoiner. And so if they meet that person will convince them about all these other use cases. By the way, again, I don't want to cast aspersions about these other use cases. If that's where you're interested, fine. But in terms of if you're thinking about it as an investment, then it really is Bitcoin. And so you then explain that. You explain why it's such a powerful concept. However you want to explain it, whatever makes you comfortable, the technology, the issuance, fixed supply. And then they say, okay, I've got it to some degree. I mean, they're never going to be an expert after one conversation or two, but they now want to invest. And where do you point them to? Because every place you point them to, what will happen is you'll point them to some site. I'm not going to say the names of competing sites.
I am. Coinbase. I'm going to say it. Coinbase. I will not send anyone there or any of these other shitcoin factories. I will say it. And that's why I really wanted you on here, because I want somewhere to point people to that doesn't confuse them and make them buy a load of nonsense that's going to go to zero so that the founders can make a load of money. I think it's wrong. So
yeah, well,
you didn't say that, I did.
So then I will move swiftly on. Yeah. But I think that was the frustration for me in terms of the problem we're trying to solve. It seems like an obvious thing, but I am trying to serve our customers. And that means that I want to try and align my interests with the customer's interests. Mm. And if someone's coming in new, their interest is to find a way of getting as safely as possible, considering the whole area is a high-risk area by definition, because it's in such a new technology, as safely as possible having an in. They're coming in as a baby. I don't want to give them sort of like this sort of rocket ship day one. You need to give them like this little toy truck to be played with. Mm-hmm. And something that's reliable, sturdy, can be thrown off a building and they'll still keep playing. And it's well understood. And what I don't want to have a scenario, and I've seen it many times before, is you'd recommend something when we weren't really courting retail customers. We were dealing with, for many years, institutional and sophisticated. We're pointing them towards other sites and explain Bitcoin, and then they go away and they'll come back and time and again, I'll talk to a friend, he goes, yeah, thanks very much. I went to that site, great. And did you get your Bitcoin? No, I didn't get the Bitcoin. I got Wibble coin or Wobble coin because it was only XP or so on. And it was being highlighted. There was a special, maybe I could earn money for learning about it or whatever. And I was like, oh my God, no, go away, buy the Bitcoin again. But it doesn't matter because these sites often present Bitcoin in the same breadth as they'll be presenting something else with 1/100th of the market cap, with 1,000th of the community support, with 1,000,000th of the technical maturity. But as a newbie coming in, there's no way you can know that what you've got here is SpaceX's, BFR rocket, and next to it is a paper plane. And you've got, no, but it literally is sometimes laughable how incomparable these things that are being compared to each other are. And so for someone coming in new, they buy the wrong thing. That generates more trading revenue for the customer because these other things are far more volatile. So they end up buying and selling. They're incentivized to trade as well. Again, after this, I didn't come from the financial services space. I came from the technology space. So I'm not a trader, which I think makes me very good as an exchange operator because I'm not equipped to think about trading and so on. I'm just equipped to think about building technical systems that are reliable and stable. And you probably don't want as a trader to have the owner of the exchange being another trader. It's probably not good idea. You want them to have no interest in trading, because all you want to do is provide a service. But as someone who's been running this exchange now for 6 years, you observe a few things. For these people have been trading for many years and multiple times, and often they've come from the city or Wall Street or wherever, and they trade. And many of them do well, but a significant number don't do so well or only do marginally well. And these are people who are at the top of their game. So if that's the results of the people at the top of their game, who with lots of skill and effort have learned to make a small pennies on the pound type profit consistently, how in the hell are you going to expect someone who's coming in new to be good at trading and make a profit from it? It's an unreasonable expectation.
But everyone thinks they are.
It's easy to do, or it's just disingenuous. So what you need to do is here comes one, only offer Bitcoin. You don't want to confuse people with other options. You need an exchange that only offers Bitcoin. 2, only offers dollar cost averaging, because that is something that we know one of the biggest concerns is volatility. Dollar cost averaging effectively allows you to reduce the volatility by yourself without having to rely on anybody else. It's self-sovereign. It's getting into the mindset of, let me fix my own problems. Let me just not give it to someone else to fix it for me, who's trying to guarantee a return, because you cannot guarantee a return in a market speculative asset. I will take my own action. The only risk then if I use dollar cost averaging, I reduce my short-term risk. I only now have the long-term risk. And I deal with that is I have to take a view. It's a speculative product like any other. If I buy a house, I'm taking a view in its long-term value. And the way I deal with that is education. So we have three things. Education, no BS education. But we're not saying we know everything. We give you a high level, put it in simple terms, but it points to multiple different sources of research, because decentralize all the things, decentralize money, decentralize education. Don't look for one, Oracle of Omaha type person. Or the sage of Omaha. You should try and find multiple sources and form your own view. And all of those things together on one site is what we wanted to exist. It didn't exist, so we made it. We were forced to make it. And now that we've made it, we're going to make damn sure we push it again and again and again until every other exchange changes to do the same thing. Or we take their customers and provide them a service that is aligned to their interests, one way or another. This is enough is enough. We have to move forward. It's time for a change. It's time for a world where people realize, exchange operators like miners were forced to realize, they serve the customer, not the other way around. Sorry, this gets me going.
No, I'm glad it does, because it pisses me off as well. And I've seen a lot of friends lose a lot of money because of exactly what you're talking about. And they go on there and a lot of the time it's unit bias that gets them. Yeah. So they'll say, oh, well, I can get 500 of this coin for the price of 1/10 of a Bitcoin. And I'll go, yeah, because it's shit. And it doesn't matter because it's unit bias. It's unit bias, and it doesn't matter because you're not looking at the supply. But it gets them every time. It's like, oh, there's only a couple of pennies. So if that goes up to £2 or £3, then I'm going to be a trillionaire. And you're like, oh, you're an idiot. Like, just go and buy Bitcoin. But I did it when I got involved, so they're not an idiot. It's just I went on there, I bought a load of crap. You were an idiot
as well. I was an idiot, by the way. We all were.
Yeah.
So, I mean, and also, by the way, you can be a award-winning maxillofacial plastic surgeon and also make bad economic decisions.
Of course.
And you can be an incredible economic genius, but not know how to type your shoelaces. So, idiocy and genius, or whatever you want to call it, have domains and dimensions. And at any given time, I am an idiot at multiple things. Like cooking, I'm probably like, incredibly, you need to call someone and give me help because I'm really bad. And there's certain other things that I probably won't admit from embarrassment that I'm really, really bad at. So it's just the nature. And I think it's exposure and time. But in terms of unit bias, we also have to expect that's the way the world is. Actually, it's a funny thing. On our site, one of the Easter eggs is on the homepage, it says the amount in BTC, and underneath it says sats. There's a little thing that says sats. Because I would have liked to lead on sats, but the reality is most people still see BTC. But then there's a unit bias thing. So I showed them the sat number. But the sats has got a little subtle underline. And when you click, it actually has a little thing that pops up that I don't really care if some people see it. It's just a little Easter egg. But it goes up and explains that a sat or Satoshi is the smallest. And this is the point, the original unit of Bitcoin. And the reason I wanted to say that was actually in the code, numbers are in sats. Mm-hmm. And what I was trying to say was, okay, sats are actually, I'm trying to give them cool. So people will think, this was the original. It predates, sats is actually, it's all about the founder when you're talking about sats, and so I'm finding a different way of, and it probably won't succeed, but a different way of getting people to think about that. And that's why people talk about stacking sats, is to get people, because then from a unit bias point of view, you'll beat everything else basically, because now you're much lower. I've got 3,000 sats. Great.
Yeah, and it's not quite at that stage yet where you can you couldn't just put it in sats because, like you say, people would go on, they'd be like, oh, well, I was here to buy Bitcoin because no one knows it yet. But I like that you've done that because it just introduces them slowly to these ideas.
And there's a lot of things like that, just slowly introducing these concepts. But and it's not just us. I mean, so there are so many other companies. There's Swan Bitcoin, there's Vimba, there's other people now. You're seeing this movement, River Financial. Until recently, unfortunately, there was Bitter in Europe. But people who are, more and more people are going Bitcoin only, who are focusing as well on simple ways for people to earn or buy or invest in Bitcoin. And it's an incredible superpower because once we decided to go Bitcoin only, in fact, when we announced that in December that we're going Bitcoin only, and we delisted Ethereum, we had it for less than a year, but we delisted it. It was one of the most retweeted stories on CoinDesk for the year, more retweeted than the Libra story at the time, and all of these other Facebook, all these other stories, which showed that we struck a nerve. But when we did this and we were in this announcement, it just everything else clicked into place because we can have an offering now that is fundamentally simpler because you just come in and the same as Swan's offering or all these other offerings, they're incredibly simple. You come in, you sign up, you buy, you're done. As it was always intended to be, as opposed to then I need to figure out, am I going to trade? Am I going to try and get interest? Am I going to try and do all these other things? It gets more and more complicated. And down the line, you can do that. But the first experience should be simple because this is fundamentally a simple concept.
I actually haven't been on your exchange to buy. So if I'm coming on, I'm a new user, I come on and I say, look, I want to buy a small amount every week. Well, I send a friend to you, for example. I say, right, don't go to the ones I've mentioned. I want you to just buy a little bit every week. How does that look for them? They come on, they obviously have to do their KYC and all the rest of it. Then
so
what?
There's two parts to the experience. One, first of all, you would probably give them a link and you'd probably, because you would set up your own account first. You don't have to, but you would set up an account because it's very, very easy to set up. And you'd immediately get an affiliate link. And the reason why is because we believe in Veris in numerous, and we call it our Veris in numerous affiliate scheme, strength in numbers. So for a period of time, the affiliate, unlike we believe it's the affiliate gets more of a percentage than we do. They get 51%, i.e. in a 51% attack. They get 51% for 3 months. And then after that, it reduces down for 3 years to 21% because 21 million Bitcoin. So for 39 months, over 3 years, you're getting a share. The reason why we do that is because we believe in low time preference and we think that education is an important aspect of this, and it doesn't take a week to educate someone. It takes months, as you found. So we want them to be incentivized across the whole journey to continually educate people and help them through that process. So they'll click your link and they'll sign up. But the sign up process is really easy. You come along, you put your email and password, and then once that's confirmed, you put your name, address, date of birth, and nationality, and that's it. In fact, initially, you don't have to put in your proof of ID to start using the system. And that's different to most other systems. And the reason why we've done that is, again, as a new user, a lot of people are uncomfortable with giving their proof of ID over, not because they're focused on privacy or so on, but it's more that they don't like the idea of that organization being hacked and they having their proof of ID with them, etc. So for a period of time, you're able to use a system just with the stuff that you can remember off the top of your head. So you can be walking down the street and you put your email. Okay, I think I can remember my email. My name, I know my name off the top of my head. My address, I only need to put the postcode in and click a button and it'll find the address you press. And then date of birth, it's like 3 fields and done. And you're signed up quicker than any other system because no matter how much people try to show you on videos how easy it is to scan your proof of ID and so on, we all know you have to find a table to find your proof of ID, then get the right lighting and doesn't blur. It's not easy to do it. Even if they try and make it, it's just not easy to do. So that's something that once you've actually been using it for a while and you're like, okay, then maybe I'll now upgrade to another level where I have higher limits or so on, and then I add that. So that's the key. It's super easy to set up. And once it's set up, the first page you go to is the auto buy page, because for retail, we only offer auto buy. There is no offering for like trading and so on. You have to upgrade to the next level to access that.
Okay.
Again, so we just simplify it. So you come to the site, there's only one button, auto buy. The trade button, if you click on it, it just goes to the My Accounts page and says, you'd have to upgrade to that feature. Yeah. Other than that, it's the auto buy feature. And you see your balance, you see there's a few, like 3 or 4 lines of simple, important information we need to tell you. And once you're clear on that, you click a button and you see your deposit details and reference code. And then that's it. You take that, you go into your banking app and you set up a standing order using those details.
Okay.
And once you set up the
weekly, monthly,
order,
daily?
Well, you can do
variable?
that. It's a standing order. You can set up any frequency you want from your banking app. So you go into the banking app that you already have, you're already used to, you already trust, that already has all your details. And you just use those details, you set them up to the frequency that you control. You're not again, this was a conscious choice, because the alternative is you go to us and then you give us the right to enter your account and take the money from your account. Again,
system.
This is wrong-headed thinking, because it's like people say, trust us that we're auditing our customers. Great that you're self-auditing, but give me tools to verify myself as well with proof of custody and stuff. It's the same. Trust us that we're going to take the money at the schedule you say, or just give me the details of where I send the money and I will, for my bank, set up the schedule. Because if I want to stop it, I just need to go into the banking app and stop it. I don't have to go to your app and then ask you to stop the direct debit, but maybe you don't stop the direct debit. It's like, teach people that they should be in control of their money. They should be in control of the schedule. I do a daily auto buy. Some people do weekly, and some people do monthly. I would, you want it, the more frequently you do it, the more granularity you have in terms of reducing the effect of volatility and price. But all of those are possible from your banking app. And once that's set up, so you sign up in minutes, then you set up the standing order, you're done.
That's it.
You can log into the site if you wish to, but from then on, every time a payment goes in, you would get an email from us saying, congratulations, you've just got a slightly larger share of the 21 million total Bitcoins. This is your new amount of Bitcoins you have. This is the amount you deposited. This is the amount that you bought, and this is your new balance. So in that email, you receive all the information you would get if you'd logged in. Now, if you log in, you can, but fundamentally, after that 3 minutes experience of 2 minutes signing up, 1 minute setting up standing order, you never need to sign into the site again if you don't wish to.
That's interesting.
Now, happy for people to sign in, but why do exchanges want you to constantly open their app and constantly sign in? Because they want you to trade. You have to understand, they want you to do stuff which is not in your interest, because you do not want to sell your Bitcoin. Every time you sell, you potentially open yourself up to a taxable event, or accounting overhead and headaches, and the risk of losing. Because what you're trying to do is trade your Bitcoin for a shitcoin, whether it's fiat or another altcoin, with the hope that the price will change above and beyond the spread and above and beyond the taxes you're going to pay, and then you buy back in. That's a very risky scenario, and most people end up on the wrong side of that bet. It's better to just buy consistently. You have no tax implication until you sell, so just never sell, and it's simple, and I don't even need to log in. It's just happening automatically. If I want to do a one-off buy, I can then also go into my banking app and just do a one-off transfer to the same details, and I'll still get the same mail, and it automatically auto buy. So I can still use it for automatic purchasing without downloading another app, and that's it.
Obviously, your account works differently in terms of you can verify, which you can't with any other exchange. So you have proof of reserves, basically, which is a massive thing. And I'd like to get into that in a minute, if we can, just to explain to anyone who's not aware what that means. Because to me, that was the one thing that really pricked my ears up. If, however, they say, well, you know what, although there's this proof of reserves, I've got an amount of Bitcoin on the exchange now that I would prefer to custody myself because I've learned enough about it, and not your keys, not your coins, and I want to store it myself. Is the process as simple as any other exchange? They can just go on and send it off in a lump sum, or how does that work?
Yeah, so to withdraw Bitcoin, you do have to upgrade to provide a proof ID. So
Fine.
you
Okay,
cannot withdraw Bitcoin without your proof of ID. You can withdraw back into fiat. So if you want to, you've been auto buying for a bit, and you're comfortable with the process, the prices of Bitcoin has gone up in your favor or whatever, and you decide to sell, you can always sell back it into fiat and withdraw. But you do have to add your proof of ID to upgrade. But once that's done, then you can withdraw lump sum, small amounts to your own wallet. Right now, the functionality is not there, but down the line, we will add an ability to set up a auto sweep. So basically, it's just that we wanted to get functionality out as quickly as possible. But the fact is, we're getting lots of feedback from different people, which shows you that something's happening if people have spent the time to give us feedback. But that was already something on our schedule. So on our list of things to do as soon as we can, but it's just bandwidth, is an auto sweep functionality. We didn't do it to begin with because we think that that's sort of step one. That's step two. First, you need to get people regularly buying and get out of the mindset of trying to trade altcoins and understanding the value of Bitcoin. Once you've got that, then you want to get people into the idea of holding us to account by checking proof of solvency audits. So they learn to don't trust, verify. And that's an important thing about that we can come on later. And the third, once the amount that they're holding is an amount where it makes sense, learning to self-custody. Again, many exchanges will say, don't worry about self-custody, just hold it all with us. No, the whole point of this is to be your own bank. And there's a phase. First of all, start understanding Bitcoin, then understanding the idea of self-verification, then being your own, almost like your own regional bank. And that's having your own, I would say, if you have your own hardware wallet, you're your own regional bank. But you're still relying often on someone else to prove that your currency is not being inflated. And then at the final stage, where you're really your own central bank, that's when you have your own node. Yeah. So that's the difference. Having your own node is your own central bank. Having your own hardware wallet is your own regional bank. So one is your NatWest, the other one is your Bank of England.
So for that person who's running their own node, maybe they've got my node, BTC, or one of these ones that's popular at the moment, they've got their cold card or Ledger, Trezor, whatever. What I think you're hinting at is that down the line, there may be a way that so that goes straight on and verified.
It was something we already had on the list, and it's also something that many people have asked for, but it's invariably the people who are more sophisticated. Yeah. And we're trying to launch, having for several years being an organization dealing with sophisticated and institutional, we're offering a retail offering. And so retail, the first product they had, and if you look at our product section, we have education as a product, custody as a product, and auto-buy as a product. So before we launched auto-buy for 3 months, the only product that was live was the education, and the custody is just there by virtue of us being us. So custody has been around since we launched the company, the exchange 6 years ago, more than 6 years ago. Education was the first thing we launched in January and or early February. And for a number of months, we would just provide the education offering where people could just learn about Bitcoin, understand it, etc. Because that is a product as well. Correct monetary re-education and correcting a lot of the sort of misinformation in the space. Then we have auto buy. And so that's now out. It's only been out and we haven't even started promoting it. It's only been out for just over a month now. And then we added the affiliate scheme because we want to win by helping other people win. Most people say, here's a $5 for getting you to join. No, if you're helping someone get into Bitcoin and you're educating them and being that person who's there to ask their questions for years to come, you should benefit from that. So that was an important thing for what we did as well. Now that those key elements are in place, now's the next run. So we were looking at going into Europe, but with all the things that have happened recently and all the demand we're seeing, we're going to be looking at expanding into Europe or at least offering the euro. We'll do it step by step. Mm-hmm. So expanding fully into Europe ourselves will take a lot longer, but offering euro for dollar cost averaging would still be something that we look in the shorter term. The other thing that's there is the automated sweep. And then further along, now that we're Bitcoin only, we have to look at things like the Lightning Network. We have to definitely look at things like Liquid and stuff like that. All of these things we'll be looking at as well.
There's a lot to do.
You can't do everything. But now that we've given birth to the actual retail auto-buy baby and no BS education, we can start looking at those things. In the background as well, we're now in a regulated world in the UK space, so there's constant work that needs to be done in that space. And also there's a little thing called the coronavirus and also another little thing called the halving, and all these things take up a lot of bandwidth right now. So it's pretty intense. We're doing like 20 hours a day, 7 days a week right now.
It's sneaking up, that halving. It really is sneaking up. So I'm watching it on my MyNode because they've added a little block at the top, and it's got the block count. Yeah. So it's just like integrated in there. They've just added it like a week ago, and I went on there and I was like, oh, that's cool. So it's just as every time it's ticking away, and I'm like, oh, it's not long now.
Yeah, I think it's set to be Monday night UK time now. Yeah, Monday night, it depends on where you look. Monday night or Tuesday morning. Unfortunately, the variability is just on either side of midnight. So it does really feel like New Year's Eve celebrations, because it's going to happen around midnight. Yeah. We need some fireworks, although from our windows of our self-isolation, but
there will be some fireworks afterwards, I'd imagine. Just a different kind. So I'm interested to hear about this proof of reserves. If you can just explain, anyone who's been in the space for long enough will probably know a little bit about it, but you are, I believe, the only exchange who's doing it at the moment.
I think more are going to start, and there's even services that are coming out that will help people perform proof of reserves. But yeah, we call them Bitcoin audits because it's a bit like dollar cost averaging or sterling cost averaging. It's a complex concept, and so we've just went auto buy instead of dollar cost averaging. And because it's an attestation or a check to verify at a point in time that we're holding more Bitcoin than the amount of Bitcoin we're supposed to be holding. As I say, we are effectively service providers. We're providing service, and our customers are honoring us with using our service. And we try as best as we can to not take that for granted. And that includes offering them products which are aligned with their interests and not trying to just make as much profit from them as possible. But another part of it is understanding that they've got to do two things: provide them mechanisms to, as best as we can, allow them to self-verify that we are doing what we say we did. When we started, every exchange, and they still do it, saying we're really reliable, really trustworthy, really secure, until they get hacked. And we had to say the same thing. And the question in our mind was, what could we do to not just say it, but provide some sort of evidence of it that the person can check themselves? And I didn't think it was acceptable to get an external auditor to be that check. And the reason why is very simple. I mean, the whole reason that Bitcoin came about was because auditors didn't do their job in checking banks in the past. So now to say, oh yeah, but rely on auditors again, hey, use auditors. But surely with the Bitcoin blockchain and Bitcoin smart contracting language and its capabilities, we can't do something better. And also get people into the mindset of verifying themselves. So the way it works is really simple. We, once a month, do two things. We get all of our customers who have balances and create a report showing customer balance, customer balance, customer balance. We then obfuscate the report. We changes to it such that any given line can only be decoded by that customer. So even though the document is public, only the customer who's the line relates to can check that line. It's very similar to the Bitcoin blockchain in a sense that the ledger is public, but only the owner of a particular address effectively, or the private keys related to that particular address, can action, decode, and be aware of the fact that they're the owner. Unless they've given that information to someone else, like an exchange, no one else would be aware of the fact that they own that particular address with 1,000 Bitcoin in it. And this ledger effectively of people's balances, we put somewhere public outside on a machine at a URL that anybody can see. And what we'll say is that at a point in time, here are the balances that we held for all our customers. We'll mix it up with obfuscated and so on. And then we provide instructions to people, to any one of our customers. And we've spent over the last 6 years, we've perfected these instructions to make them, we believe, if you're reasonably technical, but you don't have to be that, it's all point and click. You can go through and verify, decode your given line, and then you will know your balance. We assume you know the amount of Bitcoin that you're supposed to have. And you can verify that the amount that we say you have in this public record is the amount that you expected to have. Okay. So that's actually takes most of the time, because that is actually where we are showing our accounts. Then the other thing we do is we bring together all the capital that we're holding for customers, and we perform a transaction on the blockchain where we'll send, and there's many ways of doing this. We don't have to perform a transaction, but that's how we started, and we like that process. We like the sort of history of it and of being consistent and so on. So we send a transaction from ourselves to ourselves for all the Bitcoin that we're supposed to be holding on behalf of our customers. As part of that Bitcoin, you can include an extra piece of information with a transaction. And what we do is we take the file that we store online, the hash of that file, which is basically, almost simple terms, is we've taken that file and we've created a fingerprint, which is a string of numbers and letters, which we can say directly links up to this file. If you change the file in any way, the fingerprint will change. And we include that fingerprint with this transaction from ourselves to ourselves. Now, at that point, we publish the transaction on the blockchain, and we've done our provable solvency. Why? Because people will be able to see the transaction on the Bitcoin blockchain. The Bitcoin blockchain is now acting as judge and jury and keeper of that information. So what that means is that at that point in time, we had that amount of Bitcoin. Also at that point in time, we linked to this file. And when you go and find that file and confirm that that's the file we were linking to, you can check the balances that we say we had in that file. Add them all up. And what you should expect to see is that when you add them all up, they are less than the amount that we sent to ourselves.
Yes.
If they are more than the amount we sent to ourselves, then we've got some explaining to do. because the whole point of this is to show that we are solvent, i.e. we have more than we're supposed to have. And if it's less, then we're not solvent. So that's the first part of the solvency check. It shows that the amount we say we have is less than the amount that we actually have, or equal to or less than. Then separately, as a customer of ours, you can verify your given line in that document. And you can verify that what we said for you is accurate. And then you can take those two pieces of information. You can say, well, there's no way you're going to know which customers are going to go off and check. And in fact, the more customers you check, the harder it is for you to know that. So that's why it's important that every customer should go out of ours and self-verify and hold us to account if we're not doing what we're supposed to be doing. So if that's the case, then you have to assume that we have to make the decision to show everybody's balance, because it's memorialized on the blockchain. Even now, if someone went back to 5 years ago and tried to do a check against our records and those balances are out, you still can call us our lies. It's forevermore we're held to account by that line. So it leads to this radical level of transparency. Now, why did we start doing this? 2 words. Mt. Gox is actually an acronym for Magic the Gathering Online Exchange, but which was its original purpose for swapping Magic the Gathering cards, but it became MT Gox, Mt. Gox. Mt. Gox, at the time, the largest exchange, got hacked for, in today's terms, a huge amount of money. And what it turned out was, apparently, they could be lying, but apparently it was insolvent for several months. Now, if that was the case and they'd been doing proof of solvency every month, they would have found out the fact that they were sold after a month, corrected the issue, and limited the damage. Mm-hmm. So this whole process and drama happened in 2013. In 2014, a Bitcoin core developer, I believe, suggested a mechanism by which exchanges could basically self-audit to some degree and provide their customers a tool to verify their transactions. And this became known as proof of reserves, proof of custody. In March 2013, Kraken, Coinbase, Bitstamp, BTC China, and blockchain.info, now blockchain.com, issued a joint statement saying that we will issue and perform proof of custody, proof of reserve audits every month going forward because of this thing with Mt. Gox. I think Kraken did one, the others never even started and never continued. The following month, we launched our programmatic exchange in April, and we issued our first proof of solvency audit. Then our second, then our third, then our fourth. And in, I think it was February or March of this year, we had our 72nd proof of solvency audit. So that was 6 years running. And now we're at 73rd. This month will be our 74th. Now,
what's their excuse for it? What's there must be, I mean, I assume there must be some sort of semi-reasonable excuse that they come up with that doesn't really
they don't have it well. So first of all, it's very hard, and I welcome the community to lobby for us to all have a nice little conversation about proof of custody. I don't think you're ever going to get the CEOs of these companies to come around the round table and discuss it. But there are the sort of excuses that I've heard are that we perform audits by auditors and so on. So effectively, you just need to just trust us because these amazing auditors are doing it. That's probably the most reasonable excuse that I've heard. And then the other second argument, to be fair, is that proof of custody or proof of reserves isn't a full audit. Because yes, you're saying that you have, it proves that at this given point in time, you have this much Bitcoin. Mm-hmm. And at the same given point in time, you had these balances. The balances, fine, I agree with that. But who's to say that that Bitcoin wasn't borrowed from someone just before and you're actually still insolvent? Right. For example. Okay. There's all you're saying is that at this particular time you're solvent, but how do I know that you are actually on an ongoing basis insolvent? And that is true. That is a weakness of it. However, the response to that is that, well, there's a couple of responses. And the most important, the technical response is that if you were massively insolvent, you would have to be moving in and out Bitcoin just before and after you perform your proof of custody audit every single time. Mm. And that will leave a trail on the blockchain. The fact that it isn't fully fungible actually works against you in that regard. So it'll be very hard to play that off on an ongoing basis. And no one to know about it. It starts becoming harder and harder. It's like to persist with that con. Mm-hmm. It's easier just to be solvent. It'd be very hard to continually keep up the masquerade. That's the technical argument. But the more important argument is this: no system's perfect. Also, auditors give a review saying we feel confident, but it doesn't guarantee that you aren't cooking the books or so on. But just because something is not perfect is not an argument not to not do it. And that's the important argument. That you go off. Also, just because you do audits through a third-party auditor is also not an argument to provide your customers with some mechanism to self-verify. And these two arguments are correct and powerful no matter what they say. And so because of that, they avoid the discussion. They avoid having this conversation because the reality is from a trust point of view, if you promise to do something and you don't do it, that already calls into question. Now, I would tell you, in my mind, why. Because these are not really valid. These are the excuses given because they're the ones that diplomatically make sense to give, and they seem to make sense until you analyze them. Now, they could have been hacked. they could be insolvent. And I do think there are a number of exchanges out there who are insolvent. Mm-hmm. But I think the most likely reason is this, that proof of custody, there's no way to get around it. It provides radical transparency. Just like the Bitcoin blockchain, you're effectively saying how much you're holding for customers and also how many customers have balances with you. That doesn't affect your customers' privacy as much, but it affects you, your privacy as a business. Mm-hmm. And how many businesses do you know who will tell you how many customers they have and how much business and trade they're actually doing? It's very, very rare. But my view is this: we're in a new economy, and this whole economy is about being your own bank and educating people to don't trust, verify. Because of the nature of how fiat to crypto exchange works, you're forced to trust the exchange for a short period of time, even though it's antithetical to the concepts of cryptocurrency. The exchange is beholden to the exchange to do everything possible to provide you tools to minimize that trust. So in this industry, given what we're doing, we need to be radically transparent to compensate for the fact that we're forcing people to do something that's antithetical to the philosophy behind Bitcoin.
That makes complete sense. And yeah, I can't see from that a logical reason to it other than what you're saying. And moving forward, it like you say, don't trust, verify. And if you can't verify, then probably don't trust.
Yeah, I really hope more and more people start asking that question to exchanges. Start asking them, why in the hell are you not doing it? I've heard it's resources. I mean, we've got very clever guys and girls in our company, but we are 1/5 to 1/10 the size of many of these other exchanges. If we can do it for 6 years, I don't think it's a resource issue.
It'd be interesting to see. It'd be interesting to see what happens. But I think what we can get from that is that your exchange is doing what it can to be as open as possible. And I like that. I like that a lot. I would definitely be checking it out, having a look through also all the education stuff on there, because that sounds interesting.
Please do, yeah. That'd be interesting. That's what we put up. We had a lot of fun putting it together. And I'm actually excited to hear your feedback on the education side.
Yeah, I'm going to have a dig through and have a look because, like I said to you earlier, I do need somewhere to send people because I do think it's important that they go and they buy Bitcoin and they average in and all the things we've talked about. And you're the first person that I've spoken to who seems to have that Bitcoin ethos, and the whole company's built around it. So I like it a lot. I think that's great.
Yeah. I think there's a lot of people in the space who behind the scenes have that ethos. When we announced we're going Bitcoin only, a number of people working in other exchanges called or contacted me privately and said, you know what, I really, really applaud you guys for making that move. It took a lot of guts. We really wish our exchange did the same thing. So there are people out there whispering in the corridors and trying to influence people. And my hope, more than anything, is that other exchanges start to make this transition. And if they do allow you to invest in altcoins, fine, but then label them clearly. It's like Bitcoin and then shitcoin casino, whatever. But you need to be clear that this is something that you need to think very carefully and you'll most likely lose money, at which point then fine. But if you're trying to make it seem like they're similar, I don't have, that's that meme. I don't. Nobody's got time for that.
Ain't nobody got time for that. Well, listen, it's been really, really good catching up with you. And like I say, I'll be checking out all the education stuff. I'll let you know once I've had a look through that. But is there anything else that you wanted to cover that we haven't, or is there anything upcoming on the exchange that we haven't talked about, or if you want anyone to contact you, where do they go, and all that sort of stuff?
Wow. Well, we covered a lot of things. I'm going to be in trouble with a lot of different sure from the stuff I've said. And also, in terms of upcoming, I already said, at some point, we want to, where it makes sense and it doesn't complicate the offering, we want to add to this functionality. But we made a conscious choice that it's all about focus. So functionality-wise, you're not going to see a lot. It's more about depth. I wouldn't consider auto, scooping or taking Bitcoin and depositing it to a hardware wallet as a new feature. That's just an enhancement to the same feature. And that's what we plan for the foreseeable. We just enhance and perfect this offering because Bitcoin DCA, that's it. But where do they hear about us? Well, Coinfloor, Coinfloor, coinfloor.com or coinfloor.co.uk. And the offering to get you started is auto buy. And for me personally, I'm lucky enough to be very early into Twitter. So my Twitter handle is Obi, O-B-I, just my name. Wow.
I didn't notice that. I didn't notice that.
It's like well, Jack's 4 letters, but I think who's another 3 letter? Is NLW a 3 letter name? I don't know. There's not many 3 letter Twitter names.
That's amazing. I didn't notice that. You must have been really early then.
I got in very early. This is, as I remember, I'm showing my age here, but I got in very early into Twitter, and I was able to get Obi. But so yeah, you'll hear my views and wanderings around crypto and decentralizing all the things and monetary education, don't trust, verify, and all this sort of stuff, various and numerous, and just understanding this technology will take a lot of people who have a sense of importance down a number of pegs. And that's frightening to some people and it's liberating to others. And I think, I talk about that and hopefully some people find it interesting.
Awesome. Well, again, thank you for coming on the podcast and thank you for what you're doing. As finally someone that I can send people to, it looks like you're focused on the right things and you want to disrupt, not just do lip service. So thanks for doing that.
Thank you very much for having me on. I really enjoyed it, Max.
Awesome.
I love those buy bits.
By bit. Yeah, well, the idea is bit by bit, change the world. But to do that, you've got to buy a bit of Bitcoin.
Yeah, no, it's very, very good. I like it. But very good. Thanks very much, matey, for having me.
It's been great. And like I say, I'll reach out and let you know once I've gone through all the videos and bits and pieces.
Perfect.
All right. Nice to speak to you. We'll speak soon.
Speak to you later. Bye, matey.